things always keep getting more expensive? Why does the bank charge you interest? Why does the bank pay you interest? Why is the interest that you pay the bank always higher than the interest that the bank pays you? What is inflation? The answer to all these questions, and many more, is that money now is worth more than money later. Which is why oldies, boomers, and people like your grandparents are always complaining about old people nonsense. Like, back in my day, both a gallon of gas and a gallon of milk cost less than $1. And that's because back then, money existed in the now, which is not now, but it was now back then. And the now of right now was there later, in which the money that they had would be worth less. And now that money is worth less. Thank you for coming to my TED Talk. No, but seriously, you can expect with virtual certainty that your money right now, the buck in your pocket as it were, will go further and buy more today than that same dollar will 10 years from now. And then 10 years from that, your money will be worth even less comparatively.
But how can you say that?
You may ask, to which I would say, sit down, be quiet, and raise your hand next time. The answer is, because.
Because why though?
Because it always has before.
But that's a fallacy.
Okay, fine. Really, it's because it's basic human nature. From Richard Nixon taking America off the gold standard, to Obama printing record levels of new money, to Trump printing record levels of new money, to our current day, with Biden printing record levels of new money. The US dollar is always getting ever cheaper. Which is actually pretty funny when you think about it. I mean, after all, the dollar is constantly getting cheaper. But it is still the world reserve currency, because though it's constantly getting cheaper, and it always has been getting cheaper, its rate of decay is slower than the other currencies around the world, which, you could argue, is because we're the world reserve currency in the first place. So the real question is, are we the world reserve currency because we're the strongest? Or are we the strongest because we're the world reserve currency? This funny yet slightly confusing concept is called inflation, and though inflation is a large reason for money now being worth more than money later, it is not the only reason. The other side to this ever-shrinking coin is called opportunity cost.
What is that?
Opportunity cost is defined as the loss of potential gain from other alternatives when one option is chosen. For instance, if you chose to put your money in a CD at a rate of 2% return each year, and then you discover that you could have put your money instead in a US Treasury bond at a rate of 5% a year, then your opportunity cost would be 3% of whatever you invested. And that, folks, is money down the drain. Let's say inflation didn't exist, and you gave a friend a $1,000 loan, and at the end of the year, they pay you back that same $1,000 that you loaned them. Considering that you could have invested that same money in a bond that pays 5%, you both in theory and in practice are down $50, which makes $50 your opportunity cost. And that's without considering the effects of inflation. So if we do consider that the inflation rate over the past few years has been 4.5%, and we add that to the 5% that you could have been paid from your bonds, that means that loaning out your money at 0% interest would actually cost you a total amount of about 9.5% a year, or $95 out of every $1,000 that you loaned out. So in theory, if you have a savings account that pays you 2%, you're only actually staunching the bleeding by 2%, not actually making 2%. So with that being said, we can estimate that if you put your money in a 2% savings account, through inflation alone you would still be losing 2.5% a year, which means over 10 years that even though your $1,000 in your savings account would become $1,200, you would actually only have about $750 worth of today's buying power left over. But what is even worse is that if you held your money in a shoebox for those 10 years, you could estimate that your $1,000 today would have about $400 less of buying power at the end of those 10 years. This is why you hear a lot of people say, savers are losers, because they will inevitably lose money over time. Or, to quote Warren Buffett, the dollar is going to zero.
Well, that's pretty freaking bleak. What are we even supposed to do about that?
Yeah, the inevitable marching on of time being a constant wear on your health, wealth, and happiness isn't exactly the cheeriest topic. But knowing is half the battle, and the best way to protect your money from eroding away over time is by investing it.
But invested into what?
Didn't I tell you to raise your hand? The answer is assets. And assets can be anything that have intrinsic value that can withstand the erosion of the dollar over time. This could be something as simple as an ounce of silver, worth approximately $30 at the time of recording this video, all the way to something as big as a piece of land or property. Another option is to invest into assets that not only hold their value, but offer a return while they're being held, such as rental properties which retain value and when rented, provide a return in the form of rent paid.
It's 2024. Who can even afford that? If I was a millionaire, I wouldn't need any financial advice.
Okay, fair point. For beginners, you can create an investing account with any of the following: Thinkorswim, Robinhood, or Webull. Once you've started an account, begin investing by buying a share of any of the following. At the time of recording this video, one share of Exxon has a price of $113, and it has an annual dividend rate of 3.3%. Or AT&T, if you want to go cheaper, has a current price of $18.17 a share, and an annual dividend rate of 6%. Finally, if you want to go even cheaper than that, Ford has a stock price of $12.07 a share, and an annual dividend rate of 6.5%. All of these are considerable options that can not only hedge against inflation, but also allow you a return. And there are plenty more options besides these if you care to do your own research. So, now you know. Not only is your money slowly eroding away into nothingness, but also that you can slow down or even reverse this process with the proper research and practice. But do keep in mind, personal finance is a practice like brushing your teeth. You have to keep up with it. And that's it. Hopefully in some small way this video has made understanding money just a little bit easier. Join us next time as we return to the world of pure imagination that is personal finance.